When you log into our seasonal platform, you will be greeted by our seasonal dashboard. Our dashboard has been designed with one simple aim, and that is to help you find the highest probability markets to trade. There are 5 ways to find trades in our dashboard, and they all center around what we call optimum seasonal patterns. But to understand how they work, I first of all need to explain 2 simple concepts. The first is, what is an optimum seasonal pattern? And secondly, what is a seasonally correlated market? To do this, I'm going to show an example first of all. Let me pick which one. We'll pick Apple. What our software does is it looks through the history of a market to find its most consistent periods in terms of both of its performance and its returns. These are what we call its optimum seasonal patterns, and they are the optimum time to trade each market. These are identified by blue bars when they are bullish and orange bars when they are bearish. The start dates of these patterns is what widely shared on the seasonal dashboard, which we'll get back to in a second. But you can see here we are in October at the time of recording this, and you'll see we've just had a pattern that started on October 8th, and we're currently seeing this market move to the upside. So these are the optimum periods we want to be involved in a market, and these are the patterns which we can share on. You'll see the statistics based on each pattern. Here's the current one that's in play. We're seeing Apple move to the upside. It has an 80% success rate. This is a 20-year pattern, which we can see here up in the top left, and the fact that it is orange, which we will also talk about shortly. It has an 80% success rate over its last 20 years, and it has a 105% annualized returns. For more details on the patterns, you can scroll down. You can see the consistency of the patterns, but I'll talk about that in more detail in another video. The second point that I mentioned is, what is a seasonally correlated market? A seasonally correlated market is a market whose price is currently following a seasonal pattern. These correlations are marked at the top of each seasonal chart. And these are again central to the information that is being displayed on our dashboards, which we'll see in a second. For reference, a market that is seasonally correlated has a much greater probability of following an upcoming seasonal pattern than a market that is not seasonally correlated. You will see also when we get back to the dashboard that there are 3 main seasonal patterns that we follow. These are the patterns that you see marked at the top of each chart. We are currently looking at a 20-year chart, and this is showing that the 20-year correlation, a current price action that is to the 20-year seasonal pattern, is an 83% positive correlation. And we can see how the yellow line current price following the 20-year orange line has been very, very close over this last 6-7 months. The other 2 years in question here is the all-year patterns. That includes all of the history we have for that market. In the case of Apple, it is 34 years. And the other pattern is the post-election pattern. That's the 4-year US election cycle pattern, and the current year being 2025 is a post-election year. So that is the current election cycle year being tracked. Its correlation is positive 57%. The all-year pattern is also in the 50s, sitting at 51%. So all 3 are actually strongly positively correlated, with the 20-year being the most strongest at 83%. I will often get asked, which pattern should you follow? The simple answer will be the one that the market is most closely aligned with. But given the fact that all 3 are actually positive here, I wouldn't object to following any of them. But we can quickly see, if we switch over to the all year where we've got a 51% positive correlation, you will see a big synergy between the patterns in a market that is seasonally correlated. We can see 76%. Its pattern starting October 9th, very, very similar. And if we switch over to the current post-election, which is the US cycle, there is another 2 patterns in here, October 3rd and then October 31st. So there's a lot of synergy across multiple patterns. They're all showing correlations. The market's expected to move up to the upside across multiple patterns. A very strong positive attribute to the market. And here, as I mentioned, there is a bearish pattern in Apple that indicates its tendency to go down during these election years, during this period, and it actually did have a little decline during that period. So they're the 2 main points you want to be aware of when we're looking at for patterns and potential trades on our platform. We have the optimum seasonal patterns that are identified by these bars along the bottom of the chart, and the seasonal correlations marked at the top. So to recap those 2 points, an optimum seasonal pattern is a period through the year where a market has a strong history of consistently moving in the same direction, while also providing consistent returns during that time. A seasonally correlated market is a market that is following that seasonal pattern, meaning it is more likely to perform as you expect moving forward. So now that you understand those 2 concepts, how do we go about finding high probability markets to trade? As I mentioned earlier, there are 5 different ways you can go about this. First of all, we have our seasonal planner, which is front and center on our dashboard, which I'll go into in a lot more detail shortly. Secondly, we have our top 20 seasonally correlated markets list. Third, we have our top 20 best performing seasonal markets currently at this point. Fourth and fifth, we have our top 10 highest success rate patterns, followed then by our top 10 largest annualized returns. And lastly, then we have our heat map, which can be used as a high level method to identify the patterns of each market throughout the year, but we'll come back to that in a second. Starting with our seasonal planner, this shows all upcoming optimum seasonal patterns. The date indicated is the typical starting date, which we've seen indicated on the Apple chart. The date is an average date, and we do not expect a market to actually start on that date. So for Apple, it was October the 8th. We'd never expect for Apple to start rallying just on October the 8th. It could be a few days early, it could be a few days late. The important point is to identify a seasonal pattern that you can see a market is following, have it on your watch list, and then focus on the price chart of that market to confirm the entry. So that is why it's really important you're looking at the planner and looking at the trades ahead of time, not just arriving on the day to see which patterns can I trade today, because the patterns that might be indicated for the current date might have already triggered 3, 4, 5 days previous to that. Along with the start date, the planner contains 3 other important pieces of information: the seasonal correlation, the historical success rate of the pattern, and the pattern that it is based on. So there's a lot of information contained here within each section. I'll use the Apple one again, but there's 4 pieces of information we have here for each. We have the date, 5 if you want to include the market. We know it's Apple. If you're not sure on the tickers, whenever you open it up, you will see the chart open, you'll see the name presented. So if you're not familiar with the tickers, you can do that to find out what it is. But we have the date, we have the market, we have the correlation, we have the success rate of the pattern, and we have the seasonal pattern in question, all contained within this small window. The correlation is identified by the color. As we mentioned earlier, when we're looking at the Apple, we've seen very strong positive correlations, 57%, 83%, 51%, all strongly positive correlations. So that tells us Apple's current price is following all of the current seasonal patterns that we track. Any market that has a correlation 50% and higher with a seasonal pattern will be identified by green. Any market below that, but is still positive, so it's +1 to +49% positively correlated, so a weak positive correlation, is identified by orange. And anything that has a negative correlation is identified with red. If you are new to seasonal trading, I would recommend you stick to optimum patterns that have the strongest correlations. And to do that, you can simply select at the top of the panel, click on optimal, and you will only see those markets with the highest correlations. The colored dots that you see beside each symbol is reference to the seasonal pattern that is being followed. Again, those are the 3 patterns that we have marked at the top of the charts by default. There are other ways we can find more advanced setups, more advanced seasonal patterns, but I'll talk about those again in a separate video. The 3 patterns by default are the all-year pattern, the 20-year, and the current election cycle pattern, which is 2025, is the post-election. Those are identified by color. The 20-year is orange, the all-year is the light blue, and the election cycle is purple. In terms of which one to select, It doesn't matter. The important thing is that the market is correlated. You will often see markets with multiple patterns around the same time, and they're all indicating the same thing. Again, if we look here, we can see Apple on October 8th, and we know this from the chart we just looked at. We also have October 9th. The 20-year has an 80% success rate over this last 20 years. The all-years pattern has a 76% success rate over, I believe it's 34 years. So the important thing is that they are correlated with the pattern, and it's indicating the likelihood of that market or the potential for that market to move in a particular direction. So it's not a case of wanting to follow one over the other. It's now a case of identifying this is a market of interest at that point in time, and then looking on the price chart for when that setup actually triggers. Lastly, the point with regards the success rate. Again, you don't need to filter out by success rate. You don't need to go looking for the highest. There's a 95% success rate here in this market. There's 86 or 75. A key point of note is that in order for a seasonal pattern to be considered an optimum seasonal pattern, and therefore to be on our planner at all, and also to be included on the charts, it must have a minimum of a 70% success rate. And in our research, extensive research and back testing, there is a very, very small difference in terms of the expected outcome in the variation between a 70% success rate pattern and a 90% success rate pattern. So you don't need to differentiate between the two. It's just there as a point of reference, so you understand a bit of information about the pattern before you go digging into that seasonal chart. That is also the information that you'll see on the chart. You remember the 80% that we had on Apple for this current pattern, starting on October 8th, 80% success rate and 105, and that's exactly what we get here on the planner. The last thing of note with regards to the seasonal planner is if you want to filter by asset class or look for individual markets. By asset class, you can come to the top. By default, it will be all. If you want to come down through and look for major currencies or cross currencies, you will can filter by those, by the indices that we follow, and looking down through, whether it's US stocks, UK stocks, Canadian stocks, whatever the market of interest to you, energies, metals, etc., softs, grains, various commodities, all can be filtered out to help you get a smaller list and help you get to the markets in question that you want to find faster. You can also search for a particular market at the top if you know the market that you really want to find. And lastly, also there's a point with regards to various patterns. You have the ability to look for both short-term patterns, which will be the default, which will range from anything from 12 to 18 days in duration, although your trades within those seasonal patterns don't have to last that period of time. That's the trade window we're looking at. There is the ability to stretch that out by looking at investing patterns. And if we go back, we have another Apple one here, and we'll see investing patterns are longer, more medium term. They will range from 18 days to 45 days. And you will see, again, there's a lot of synergy around this date. Apple, over the last 20 years, again, October 9th, there's an 80% success rate. This time over a much longer period of time, you will see it's actually 38 trading days for this one. So if you want a slightly longer time horizon, you have the ability to switch to the investing patterns. You can do it also within the chart by switching between trading and investing. The next two ways to find markets to trade, we will focus on our top 20 lists. The top 20 seasonal correlations is one of my personal favorites. This shows the markets that have the current strongest correlations to a seasonal patterns, and therefore most likely to have a more predictable path moving forward. And you can see this list has a huge variety of different markets, but also very, very strongly correlated with their seasonal patterns. We have 95% at the top, going down to Tesla at 84% at the bottom. So all very, very strongly correlated. If we look at the one at the top, it obviously has markets across full spectrum. In this case, it's an Indian stock, and you can see the correlation that we've had throughout the year. The yellow is the daily closing price, and the orange is the 20-year pattern. And you can see how strongly correlated it has been right throughout the year. And within the optimum periods, we've seen a nice move to the upside through April. Bit of a range bound actually through the May period. It was a bit late before it woke up. And then we've seen strong performance heading into August, September, two really good performing optimum periods. And we're about to enter a sixth one of the year, which is really interesting, but a very, very strongly correlated market. These markets, I'm happy to trade at any time, even outside their optimum seasonal window, because they're following a very predictable path and they have a higher probability of actually following that pattern moving forward. Another thing that I like to use the top 20 seasonal correlations for is it allows me to see which asset class is performing the best. And by that I mean which asset class is actually following its seasonal patterns the strongest. If you're an experienced trader, you will be familiar with a lot of the names that are on our list. If not, you might take some time. There's some Indian stocks, some US stocks, some Australian stocks, actually a Canadian stock on there. We've got silver, we've got gold, one cross currency, Swiss yen on the list. So we've got a bit of a variety, but generally there's a lot of stocks on this. And if we want to break it down, if you actually want to go into an asset class in particular, you can see with regards currencies at this point in time, it has been the case for a while actually. The Swiss franc has a strong correlation. The euro has a strong correlation. You can see the Swiss franc again, the Japanese yen, also New Zealand dollar and the Canadian dollar positively correlated. Then we start to see a breakdown and negatively correlated patterns. So there's not many within the currencies that are actually following their seasonal pattern at this point in time. If you want to look for seasonal opportunities, then it wouldn't be an asset class I'd be focusing on. If you want to trade currencies, there's going to be better seasonal opportunities in the markets that are actually following those patterns. So I'd be focusing on Swiss franc, euro, Japanese yen, Kiwi, and CAD. But it's a case we can find the markets that are following seasonal patterns. You look at US stocks, large number, all in the 70 plus bracket of, UK stocks. We look at the US stocks, also strong correlations. UK stocks, the Australian stocks, strong at the top. Will actually drop down quite quickly down through the list. Energies has a decent basket. We have a strong correlation at the top through here, for gasoline, natural gas, crude oil, very weak positive, and then a few others breaking down below that negative correlation. So it's quite easy to see which markets you should be focusing on. You'll be able to see by the positive correlations which markets you want to focus on through the planner. But obviously you can do that also by looking at the optimal. But if you want to zone in on actually a specific group, using this top 20 list is a really good, useful tool. The next is the top 20 performers, and that shows you the markets that have performed the best over this last 6 months during all of the seasonal patterns that they've had during that time. We have the success rate that they have had during the seasonal patterns over the 6 months. We then show the number of seasonal patterns that they've had in that 6 month period and the percentage gained during the seasonal patterns. So you can see all here have 100% success rate within their optimum periods. And again, you can filter down through various asset classes. You can see the Swiss franc with 100%, Japanese yen with 100%, and going down through again, the stocks will more often have a stronger correlation and a stronger performance. We can see 4 patterns for eBay in this last 6 months. If we open eBay, you can see instantly the yellow line, very strong correlation with the orange line. Nice strong performance here in the period through July. Interestingly, we have a positive optimum period through the end of May into June where the market rallied to the upside, and then it is expected to have a decline, which we also then did. And actually eBay has a 75% success rate in that declining period. So this list is also very useful to help you see which markets are actually performing in line with their seasonal patterns. And again, it helps you find those markets because market that is following a more predictable path is again more likely to continue following that predictable path. Scrolling down the dashboard to our high success rate patterns and our high annualized returns. These show only the patterns with the highest success rate. We have top 10. Again, you can filter by various asset class, but by default, it shows all. And you can see the success rates that we have in question, 96, and then the rest, all 95% success rate. These will be over different periods. It gives you the direction. It might be a 20-year pattern, could be an all-year pattern. The direction is all long. They're all stock related. You can see the returns, the maximum gain, the max loss, some very, very small losses in through here. And there's a couple of them I really like, a couple of them on my current watch list. Rockwell Automation ranging nicely as we typically do through August, September and into October. And that's now entering a period where we typically see an outperformance, and that's moved to the upside. If we click on the pattern in question, it's the beginning of October 28th. It has a 95% success rate, 109% annualized return during that period. If we scroll down, we can see the pattern in question in a lot more detail. It says from the 28th of October to the 14th, 19 wins in the last 20 years, only one losing year, and that was on 2015, and even then it was only just. So a very, very consistent pattern that we can see here from its history. And again, that's the kind of pattern I want to be trading and I'm certainly interested in. We may have already had the seasonal low in here and we're starting to enter that sweet spot. We're looking for a breakout above these highs on the price chart. And of course, to access the price chart, you can simply click on the trading view button and that will take you into that chart. So you can then start planning the trade on that market. The last table at the bottom has the upcoming seasonal patterns with the highest annualized returns. Unsurprisingly, at the top, we have three patterns linked to crypto, Bitcoin, and Ethereum, and Bitcoin again, and we have 460% annualized returns. But even away from the cryptocurrencies, moving into some US stocks, with DEC and Nvidia, AMD, some big returns coming through here, big maximum gains, and very reasonable max losses that they've had during those periods. So another way to help you find markets you want to trade. These are not indicating that they are seasonally correlated with a particular pattern. It is just the statistics of the pattern historically. So when you go onto the chart, you may find that it's actually not correlated with that. And then it's a bit of deciding factor whether you want to take that trade or not. Finally is our heat map. And the seasonal heat map is a really good place to start for anybody who is new to seasonal trading. It's a very high level way of looking at seasonal trends and seasonal patterns. We have a list of markets down the left hand side. It is this tickers and the symbols just for reference. And it's just the major asset classes. We start with our currencies at the top, into the indices, and through down the stock sectors. We then have financial US treasuries and commodities, moving down through our energies, metals, and then into our wheats, corn, soybeans, etc. If you're not familiar with these, again, you can click on the symbol and it'll open up on the chart. And you'll see what they are, but it won't take you long getting used to each asset class. What tells us, we'll use the Australian dollar as an example. It tells us the performance each month throughout the year. And it's a very high level way of seeing how each market performs throughout the year. You can see the Australian dollar typically starts negative through January, has an upturn through February, fairly neutral in March, strong performance through April, negative in May historically, and then a decent summer correction in August, and then a little bit more range bound in nature towards the end of the year. So you can get a sense of this entire seasonal patterns by just looking at those monthly performance stats. It might be a case that you're looking at a particular month. We're in October at the moment. You can look at October, heading into November, trying to identify which markets could be of interest, where the biggest moves are coming up. We have selects of crude oil, heating oil in here, big declines as we head into October. Big blue numbers here, big positive numbers, all are linked to US sectors. So that's indicating that equities tend to perform well through November. A big number here for the VIX. VX is the volatility index. A big number on the negative side for the VIX. VIX moving lower is bullish for equities. So it's no surprise that the indices and the sectors are bullish through that period. So you can use that heat map in that way as a high level overview to help you set a plan across various assets and at different times of the year to then potentially go digging into certain areas. If it's the US sectors, for example, seeing which are setting up, which are in line with their seasonal patterns, and focusing in that way. So you can see there are many different ways you can start digging into seasonal patterns, finding optimum seasonal patterns. Key things to remember is the correlations. We want to find strong seasonally correlated markets. We want to identify the seasonal pattern before the start date. We then want to focus on the price charts of that asset, looking for a trigger, a signal, the price action trigger into that market, whether it be a breakout, a bounce off support, a bounce off resistance, whatever happens to be your trading style. I personally favor breakouts, so I'll look for trading patterns and seasonal patterns that give me that type of technical setup. But once I've identified and done the research on the seasonal patterns, it's then focusing on the charts, waiting for the entry, time in that entry. And always remember, it can be a few days early, it can be a few days late. So it's not a case of just coming onto the platform, whatever the current date is, clicking on the patterns on that date and expecting them all to rally. Do the work ahead of time, build a watch list, set alerts, wait for price action to confirm, and you will find many much higher probability trades this way than you would just be looking through charts alone.